The US dollar is breaking down today, so in this video, I'm going to show you what that means for the euro, the pound, gold, and silver. So if you're new here, my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's get right into it here with the DXY. We are finally seeing a breakdown after really almost 3 weeks of sideways action. It was 13 days of sideways movement here within this range for the DXY before finally we are seeing a breakdown here so far today. Now, this is also in line with what we've discussed in recent videos though, because what I've said is that even though the market was sideways, you can see here, this was your support level, okay, off of the lows back here. This was basically the 2026 trend. This was the trend line down here that we've talked about. And you can see where we were trading below this here for a couple of days before this breakdown. So nobody should be surprised by the move lower here from the DXY simply because this market was holding below that previous support area. Furthermore, too, we talked about this before, but you can see this level up here, this goes back basically a year. And this move, okay, this was FOMC up here. And you can see this move right here lost this support area, became resistance, okay? So again, even though we were sideways here, you can see where the DXY had lost this area up here, and then it lost this area here before today's drop. Now, in terms of where this could be going, okay, so what we talked about before was that if we do get follow through to the downside for the DXY, that could mean a move back here toward this imbalance. So if you'll notice on this move, this displacement, we have an imbalance down here, basically below this low right here, okay? So it could mean that we come down here and either sweep this low, or we could push a little bit lower down here into this full imbalance that we saw back here in May. Now, the key for the DXY in terms of the trend, okay, in terms of the structure here, is that if we move out, what you'll notice is that, again, this was the breakout that we saw right back here. And this failed on that close following that FOMC, okay? Now, in terms of structure, okay, a couple of things here. First of all, you can see this is the movement we've had so far in 2026. And what it means is that this up here is your break of structure. This down here is now your protected low, okay? So if this low gets taken out down here, so right around 97.62, if this low gets taken out, then we have a change of structure for the DXY and things start to look a little bit more bearish, okay? Now, if we stay above here though, and just consolidate down here into this inefficiency and then start to push higher from here, then it means that the overall structure is still intact. And that's why I said before, you've got to be careful getting too bearish on the US dollar while we are above this low back here, okay? But ultimately, again, we are seeing that push lower down here into this imbalance. So right around 98 to 98.5. So that is likely the next stop here for the DXY. I do expect that if we get down here into this pocket, so notice this congestion back here for the DXY, if we do get down here into this pocket, this is going to be a strong support area for this market. So really talking about like 98.20, 98.30 down here in this region, we have the imbalance back here that is still unmitigated, but looks like it will be mitigated here pretty soon. And then we also have, again, all of this movement back here, which if you draw a line through kind of the middle of this, you can see right through here. This is where I would expect the DXY to find some support. And then of course, we also have that low at 97.62. Okay, but ultimately looking pretty bearish here for the US dollar following the two breakdowns we've seen over the past few weeks, this one up here, and then this one more recently. Okay, now if we move over here and take a look at the EURUSD, and by the way, if you want to use the broker that I trust the most, check out the link right below this video. That's going to be a link for IC Markets. With that link, you can get a 100% deposit bonus up to $1,000. So if you deposit $1,000, they are going to give you a $1,000 trading credit to trade with on top of that. So your $1,000 account goes to $2,000 right away. And then the crazy part is on top of that, they're going to give you 50% deposit bonuses after that up to $25,000. So in total, they're going to give you up to $26,000 to trade with in addition to whatever you deposit. Now, on top of that, if you deposit $10,000 or more into your account, I will grant you lifetime access to our Discord group and also the full SMC course. So check out the link right below this video. If you don't see it there, check out the description of this video for the link. So with the euro here, we have the market pushing above this protected high right back here. So the way this looks here is you can see where we had the BOS, okay? So BOS back here, break of structure to the downside. And then this right here means that this is our ultimate protected high up here, okay? So still a long way away from that high, but the structure within this though was this low back here, okay, which we took out. And then this became the protected high of this smaller structure within that, okay? So we are breaking above that. So this is looking pretty bullish here for the euro in the short term. Now, just like the DXY though, we do have an imbalance back here. So in this case, really between 117 and 117.50. In my opinion, that's probably where we're headed next year for the euro to come back up here toward this inefficiency to mitigate that area and give us that full efficient auction that the market lacked back here in this area back in May. Okay, so I would keep an eye on 117 to 117.50. That's going to be resistance. But ultimately, like I said, this is looking pretty bullish here in the short term, at least for the euro. Okay, and one thing too you can do here is if you go to, let's say, an hourly time frame. All right, so if you go to an hourly time frame, what you'll notice here is that off of these lows right back here, if we just take a parallel channel, okay, so off of these lows back here, what you'll notice is that we have an area that comes in, okay, right up here at that imbalance. Okay, so notice this red box up here, this is going to be that imbalance. So again, between 117 and 117.50, this is the area up here that I would keep an eye on. That's going to be resistance for this market. Not that I would go out and just blindly short the euro, but if you are in a long position, that is the region that I would really watch in order to, possibly take profit. Not financial advice, but possibly take off some profit up here in the 117.30, 117.40 region. Okay, so moving along here to the pound. Now, this one too, we've talked about recently, and it is behaving pretty nicely so far. So the one thing that I've mentioned in recent videos was that we had the market breaking above this trend line here. Okay, so you can see resistance all along this way. We had the close above and then new support right here. So for this market now, we are coming up into these highs back here. So I do expect sellers to come out right around like 136.50 or so and defend that area. Again, it doesn't mean you just go out and blindly short this market because right now it is breaking out from this trend line and starting to look a little bit more bullish here with this higher low down here. Now with this higher low too, one thing that we can do, just like I mentioned with the euro, is we can actually take from the lows down here, take a parallel channel. And this is something that a lot of people don't do, but you'll be amazed if you start doing this, how often the market will respect this. So this is essentially an early stage channel. An early stage meaning that we only have two touches down here, and then we have this high up here. But knowing that markets love symmetry because they often revolve around a mean, meaning that this right here, this midline, is the mean of this channel, right? We revolve around this over and over again. So when we come up here toward the top of this channel, possibly sweeping these highs right into this imbalance back here, this is the area that I would watch. Okay, this is likely to be resistance here for this market. So really between 137, 137.50. Okay, this is the area that I would watch here for the pound, possibly some resistance up there. Again, you look at the symmetry here off the lows with this high up here. This is the area that I would watch. Okay, so bullish for now though with this market, again, breaking out from this trend line. But we do have some resistance coming in the form of these highs back here along with the top of this channel. Okay, so let's move along now to gold XAUUSD. And before we move any further, if you want to see exactly how I trade and get the exact strategy that I use every single week, check out the link right here on the screen. That is a completely free SMC strategy. So it's the same strategy that I use. Check out that link, click on it, enter your name and email address. You will be given completely free access to it. So if you don't see that link here on the screen, check out the description of this video for the link. So with gold, what we've talked about in recent videos is that this market has been very sideways for several days now. So you can see that ever since breaking above this area here around 43.33, okay, this was the level that I mentioned to watch. You can see where we closed above it back here. However, since that time, this market has just been going sideways. Now, on top of that too, we have this trend line here off of these highs. Now, this is actually the top of a parallel channel off these lows back here in early 2026. And so you can see where gold had trouble getting out of this area, okay? And this is what I said in recent videos that really until we saw a clean breakout from here, you had to be careful. And certainly that was the case because I mentioned it back here. And, we went sideways for over a week. So it was really easy to get chopped up here in this price action. Now with today's action though, here on Wednesday, you can see where we are getting some follow through here and it looks pretty convincing so far, especially with the US dollar dropping so aggressively. So if this continues and we can hold above here, okay, if we close above this area through here, so if I draw a line across this, what I would say is, this area right across here, if we close above these highs, then this area down here flips to new support, okay? So really right around 43.80 all the way up to about 34.20 or so. So that becomes new support for gold if we close above. Now in terms of where we could be going, okay, notice this area right back here. So essentially above this high, okay? So off of this high right back here, you can see basically above, let's say 4,600. That is going to be the imbalance that I would watch back here for gold. This is unmitigated, okay? It was a very inefficient auction back here at this time. And so I do expect that if this holds, okay, today, I would be looking for the pushback here, not only toward 4,600, but possibly sweeping this area up here over the coming days. Okay, so that's near term. Obviously, longer term, we could see this market push higher. All depends on what we get from the DXY here, right around that 98 to 98.50 area that I mentioned. But in the short term, again, if we hold above here today, hold above this congestion that we've seen, this becomes new support. And we've got this high up here. Everything above this up toward about 4,700 is going to be an inefficiency. Okay. And the market, likely comes back here, sweeps that high to mitigate that inefficiency. Okay. And then from there, we'll have to wait and see what kind of structure we get from this market. But it does look, like I said, pretty constructive here today on Wednesday. Okay. So last up, we have silver, XAGUSD. Now, this one too, we went sideways for a long time, holding above this high from right back here. Now, this was on a 4-hour time frame. This was a protected high. Okay. So you can see the BOS down here, right? We closed below it, meaning this was the protected high. What that also means is that this now, okay, if we take this off of here and just draw a trend line, snap it to this high right back here and draw it across, this now becomes your change of character. Okay. So we have a change of character. Now, what I said in recent videos was that ideally we got the push down here into this region. Okay. Ideally, I would want to see this low get taken out in order to look for a buying opportunity. As you can see, all we did was take out this low back here, which was part of this sideways chop. Okay. So we took out this low. We also took out this one back here. So really, pretty nice here from silver, taking out those lows, sweeping into that liquidity before we get the follow through. So if you missed that sweep, the one thing to watch now is going to be follow through. Okay. So again, you've got these lows here. Let's move in here so we can see a little bit better. And we've got these two lows. If I snap it here to this low, okay, draw this across. And then we've also got this one back here as well. So again, what you'll notice is that we did sweep both of these lows. So if you're going to trade this as a liquidity sweep, then what you need to see now is follow through. Okay. So we need to see buyers following through with the high up here before the move that triggered the sweep. Okay. So really this high up here, this one up here, right around 66.80 or so, you would want to see this market clear this convincingly on the 1-hour time frame, the 4-hour time frame, to really get above here and show that this was in fact a liquidity sweep and the beginning of a larger move for silver. Okay. So if we do that, if we get above 66.80 up here around 67, if we get above that region there, then in my opinion, we're likely headed back there toward the yearly open. Okay. This area back here, right around 71.33. This is the yearly open for silver. So if we get above here, guys, short-term trade, possibly get above like 66.80 or so convincingly, that could push us back here toward the yearly open around 71.33. Okay. And then from there, we'll have to wait and see, but this is going to be a big resistance area up here if we do get there, because again, not only is this a resistance level, it's also the yearly open for silver. And we've been trading below it since all the way back here in June. Okay. So, really jury is out so far right now for silver. We did see the sweep, but again, you want to see that conviction, that follow through to take out these highs back here to push back there toward the yearly open. If it can't, then we could just continue to push lower down here into the lows. Again, it all depends on what's happening with the US dollar. But looking at the US dollar, looking at gold, I think that the likely scenario here for silver is that this is a liquidity sweep, but we still need that conviction, that move above that 66.80 area. That's it for today's video. If you found it helpful, keep it locked in here, subscribe to the channel. Also check out the link right here on the screen for that free SMC strategy. That is completely free. Click on the link, enter your name, email address. You will be given completely free access. So until next time, trade well. I will talk to you again in tomorrow's video.